All right, we're live. Let's talk about what do we want to talk about? Let's talk a little bit about trading. A lot of people will look at this video and be like, or look at my channel and see 800 videos that are 5 or 6 minutes long for the most part. And some will get an idea of what I'm talking about. But it looks like a lot because it is a lot if you don't know what you're looking at. However, the stuff isn't a lot. When I say stuff, the features on your charts should be different time frames, and that's what you'll see on many of the videos that are on my channel. But what I want to talk about is what most people do not know when they get into trading, and that is the basics. It's one of the few industries where the basics are skipped over, and it's no one's fault. It's not necessarily anybody's fault because you don't know what you don't know. So could you imagine doing surgeries before you went to med school, or going into a courtroom as a lawyer? You never went to law school, and yet trading, you can open an account and start trading, but you never educated yourself. You might have watched some videos. You might know how to buy and sell. You've seen some business channels. The stock goes up, and if you bought it at 20, you could sell it at 30, and I made $10 a share. Great. There's a lot of rabbit holes in the internet, with the internet rather, as to training and experts and everything else. And I'm not here to disparage anybody else, because every industry has people who are bad at it, whether it's car mechanics or plumbers or electricians or CPAs, trading, education, everything. So I don't want to hear any of that. This guy sucks. This guy's good. Every business has both good and bad. In fact, most are bad. But we're not here to disparage anybody else. What we're here to talk about, and what this channel is about, and what's different about this channel than any other kind of education that's out there, is the fact that it's different. What's talked about is different. That's not my opinion. That's everybody who comes to me and says what you're talking about is different and unique versus everything else that they've learned about on the internet. The great thing about the internet is you have all this information at your fingertips. The bad thing about the internet is you have all this information at your fingertips. So you can't blame yourself for going down rabbit holes. But when you do that, you miss the basics. And that's why the basics are so important in this business. I'll look and talk about all these different lines on a chart and all these drop-down menus that people have on their charting. Like, what charting software is good? Is this good? Do you like this? Listen, they all suck because they have drop-down menus of all these technical tools and all the names of all these features that are irrelevant in trying to predict price. If you don't know why price moves, you have no business trying to predict it at all. Most people don't even realize that they're in the predictive business when they try to trade or invest. They're trying to predict if the price of the instrument that they're trading is going to go up or down. A lot of people trade futures and don't even grasp the concepts of going short. And if that's the case, go become a plumber, because you're missing the basics. The point that I'm making is, what is it that you're looking for when you try to trade? You're looking for an edge. You should be. You're looking for an advantage over those that you're trading against. Do you even know what an edge is? Do you even know, define an advantage to me? I'll give you an example. This is extreme. An edge in trading or investing would be having information that's going to move the market before most of the rest of the world. And so if you knew that the Fed was going to surprise the market tomorrow, and 30 seconds before it hit the wires, Powell was going to say that we meant to increase rates by 50 basis points instead of 25, and we made a mistake, and we really feel that inflation's a bigger problem, all of a sudden, the equity markets would plummet. If you knew that 5 seconds before that statement came out, you'd make a lot of money. You had information for most of the rest of the markets. Now, that's an extreme example, but it's an edge nonetheless, wouldn't it be? You're not going to get that. I'm not going to get that. I'm using it as an example of an edge or advantage you would have in this business. What's another one? Like, if this is the metaphor I use. If you're walking down the beach and you find a bottle, you open it up and a genie comes out, and the genie says, I'll grant you one wish. I'd say, well, what happened to 3? No, one wish of any trading data you want. I'll give you, what do you want? Some people would say, well, tell me where the market's going to close tomorrow. No, I can't tell you what's going to happen in the future. Data that's coming out or came out, what do you want? What would you answer? What would be your wish? Most people would think long and hard about it and still not have the right answer. They come up with some variation that they may or may not be able to get on a charting software package anyway. They wouldn't be able to comprehend, well, what would be an edge? What is the advantage that this genie could give me of data that's coming out right now or came out that would give me a clear advantage over those I'm trading against? She can't tell me where it's going to close tomorrow because that didn't happen yet. It's got to be something that's going on right now or something that happened. What would be your wish? Most people listening wouldn't know what their wish would be. There's a couple of them. Number one, can you tell me when a big buy order is going to come out 5 seconds before it comes out? She'd go, no, that didn't happen yet. Oh, okay. Could you tell me the cumulative positions of everybody that's trading? She goes, yes, I could tell you that. Would that not be an advantage? If you knew everybody's positions that were in the market, especially day traders, short time frame hedge funds, or individual traders, and you knew everybody's position, would that not be a tradable edge and an advantage that you'd be able to use? And the answer would be, hell yeah. There's a lot of people watching this video. Don't blame yourself. They wouldn't even know if that would be an advantage. Obviously, you wouldn't know if that was going to be an advantage. You wouldn't know to ask the genie. So you've got to be honest with yourself. Would it be invaluable data to know everybody's position in the market that you're trading? Heck yeah. Of course it would be. Why? Well, that's one of the basics that you're missing. When I say people skip over the basics when they get in this business, that's part of what I'm talking about. You don't understand that people who get into positions have to do what? They have to get out of positions, right? This isn't you bought a house in 2023 and you're going to live in it for 20 years and sell it in 30 years, 20 years, 5 years. No, let's say you bought the house today and you got to sell it this afternoon. You bought it this morning, you got to sell it this afternoon. That's what trading back and forth is. So it would be important to know how many people came into that neighborhood and bought houses today if they got to sell them this afternoon, wouldn't it? In order to predict the prices of the houses in that subdivision? Of course it would. So if you look at, and this is the easiest way to explain this, after you buy it, you're a seller. What does that mean? After you buy to get long, let's assume you bought 5 contracts in the S&P E-mini and you're long 5 contracts. What do you have to do to cover or flatten that position? Are you a buyer or seller to cover the position? If you're long and you need to cover a long position, you are a seller. And if you're a seller to cover a long position, and all of a sudden you find out that there are thousands and thousands of other contracts that are long that have to cover those positions, and you also determine that 1,000 contracts long is a lot, what did you just predict that has to come to the market? Selling, right? But you don't know how many people are long. What if you did? That's why it would be a great wish if you were to stumble upon that genie. Now, let's look at it another way. Why the F does price move? If there are more sellers than buyers for any market, it's not helpful to have that imbalance for the price of something to go down. It's not helpful to have more sellers than buyers for the price of something to go down. It's necessary. It's necessary to have an imbalance of sellers over buyers and sellers who have to sell it versus wanting to sell it. If you're long 5 contracts and you're a short time frame day trader, you're long 5. And so you're going to get out of that position. And then you have to sell it, right? You're a little bit more emotional if you have to do something versus if you want to do it. So you're now a seller with some emotion. That's who I want to follow. That's who I want to track. Because those are people that have to do it. When you have to do something, you're more inclined to do it. You're more inclined to get anxious. You're more inclined to have all those negative emotions, to chase, and all the rest. So always think when I'm talking about these principles, put yourself in your own trade. When you're long and you're long 5 contracts and you got long at 13 even and the son of a bitch is trading 11 even and you're 8 ticks underwater on 5 contracts and you didn't intend to take 8 ticks of heat, but you're still not out, you're a seller, right? Are you a seller that's anxious? You're damn well right you are. If the price comes back to 13 after taking 8 ticks of heat on 5 contracts, which you're not used to doing, and you're have the opportunity to scratch it, to break even on the trade after just taking 5 ticks of heat or 8 ticks of heat on 5 contracts, you're begging to get out. You're more inclined to scratch that trade because you know what the pain just felt like being underwater 2 points on 5 contracts. So it comes back to 13 even and gives you a chance to break even. You're thinking, God, you're telling God, I'll never do this again. You're a seller, right? Just get me out at 13 even and make this trade go away. It's break even. You might even be a little greedy and say, I'm gonna pay for a commission. I'm gonna take a break even plus 1. And then the price comes to 12.75, 13 even. You're looking at 13 quarters, gonna make your 1 tick after taking 8 ticks of heat, and then wham, goes right back down to 11, 10, 9. Now you're like, why did I not just get out for the -1 or for the break even when I had the chance? Put yourself in that position. If you've traded long enough, you know what that feels like. You've probably done it many times. Now think about this a second. You're long 5 contracts from the price of 13. You know what it feels like to have an immediate 2 points of heat on 5, and it comes back up and gives you a chance to break even, and you don't take it. You wanted to, but you're a little greedy. Now, what if you knew there were a lot of people that were long around 13 even? And a lot of people took heat down to 11. And a lot of people were feeling like you, trying to sell 13 quarters to make that plus 1. Did you not have a clear black and white edge to be able to predict that 13 even area was going to be great resistance? What do you need for good resistance to be good? What do you need for resistance to work? You need people who don't want to just sell it. You need people who have to sell it. Because if they have to sell it and they don't get the 13 quarters and it goes down to 12, it goes down to 11, they're like, shh, I'll take 12 halves. And then they lower it to 12 half. They lower it to 12. The chase is on. It went up to 13. What if you knew there were a lot of people long, took the pain that you just took, feel the same anxiety you're feeling, and they're begging to get out at around 13 and they didn't get filled? And then it curls back over. The reason why it curls back over and starts heading back down is because of that dynamic that played out. Too many people were long and trapped at 13. They were trapped long. What are longs? Longs are buyers or sellers? Longs are sellers. What do you need for the price to go down? Sellers. What helps price go down even faster? Sellers who want to sell it or sellers who have to sell it? Sellers who have to sell it. Do you have to sell it when you're long? You're damn well right you have to sell it when you're long. Are you anxious when you just took 2 points of heat on 5 contracts? You're damn well right you're anxious. So all that stuff, which isn't that hard to understand once you play it out in your head, is what makes good resistance good. It's the reason why resistance works when it works. Everything else is bullshit. 50% Fibonacci retracement. If it happens to line up with a 50% Fibonacci retracement, that was just coincidental. The real dynamic that made the 13 evens work as resistance in this example is there were a lot of trap longs in that area, people who have to sell it. And they were begging to sell it, and it didn't get filled. Some were greedy, and now the chase is on. Because you need an imbalance of more sellers than buyers for the price of anything to go down. Well, how could you predict the direction of price if you don't know where buying and selling might come from? Where's it going to come out of thin air? Other people's positions. That's the acronym I want people to understand. OPP. And in the vertical stuff that you see on the videos that I have on this channel, it looks like a lot of information. It's not. They're just different time frames. How many people are coming in long? How many people are coming in short? At which price? We have a moving average of where the average long and short positions are on a particular chart. So get out of your own way and strip out the psychology. It's about diligent reaction when you trade. It's about driving a car, absorbing all this data, and knowing you're going to default to the training that you had by learning and the experience you've been able to accrue when you drive a car, to not only stop when the guy in front of you has his red lights on, to anticipate that son of a bitch is going to stop so you don't hit him. If you have to wait to see his lights all the time, you might end up in his back seat. So you have to anticipate in order to predict. That's the difference between a good driver and a shitty driver. You have to be able to anticipate what price is going to do, because that's what the job is. You have to predict where price is going to go. So the information you're looking for is what other people are doing with respect to the positions they not only got into, but that they're stuck into. Trading is all about finding out where the traps are at different price levels. Everybody's got lines in the sand and lines on their chart for different reasons, but if it doesn't include the dynamic I just walked you through of trap longs at 13 even, and people who have to sell it, then resistance in that area isn't going to be consistent. You have to be able to know the definition of support resistance. You have to know the dynamic that makes it work when it works. Then you have to be able to qualify or disqualify if there's enough of it to execute a short, because you want to get short into resistance and long off support, but you can't just lay bids and offers to get long and short. That's ridiculous. You could have the best support area in the world. You can't put a bid down there at 9. And what if it goes to 9.25 and rallies 20 points? You were right, but you weren't on the team and you didn't make any money. It doesn't count. You can't just be or try to be too perfect or find some magical level that all you have to do is bid support and offer resistance and life is good. Ain't going to work. And I know people listening and watching this know what I'm talking about because you've tried it. And I don't blame you for trying it. Everybody's trying to create science out of the massive psychology and art that trading is about. Just try to find out and define what edge or advantage you're looking for, because if you don't know what advantage you're looking for, how are you going to find it? The answer is you're not. You're going to get sucked into all these squiggly lines, and then what you're going to do is you're going to take a couple drop-down features on that charting platform you got and say, well, if I combine these three, nobody else is doing that, and when they all line up, that's the one that's going to work. And even if that did work, you still got to qualify and disqualify it, because you're not just going to buy that same exact price and it's going to work. You still have to be able to read real time. I don't care if you trade for 2 or 3 seconds, 2 or 3 minutes, 2 or 3 hours, or 2 or 3 years. You are a trader or an investor or anything in between. You got to be able to read what's going on right now. And you need information before most of the rest of the market. And I don't mean the example of knowing a comment from a Fed official that's a big surprise, or a big economic number before it gets released, because we're not going to get that. But what you do have the opportunity to get is a sample size of other people's positions. Stop thinking about how you feel before, during, and after a trade, and start thinking about other people and how they feel. And when you're able to herd them together, now you know what the market feels like. Now you're reading the market by reading the chart, because you're reading other people's positions. That's the anticipation that you need in order to sharpen your predictive skills, or everything else is useless, or it becomes useless. And most people can't describe why price moves. They have absolutely zero business trying to predict it. And don't give me, hey, I think it's going to rain today after you're wet. Don't count. Don't tell me it's going to rain today when you see gray clouds and thunder. Doesn't count. You got to tell me it's going to rain before we see the clouds. What did he know? Well, what he knew is he had some tools and modeling that showed that clouds are going to pop in. And that's where other people's positions allow you to see something nobody else saw. And so those might be watching this. So, well, why would you share something that's so great? Well, we don't. Number one, we have subscriptions, but we vet the people that come in, and not anybody is able to get access to our charts. There's a certain process, because there is almost like this is a nightclub that a certain amount of people are able to view it, and you got to wait until someone leaves before someone joins. And I say this because it is that powerful, that unique. But if you don't understand the value of other people's positions and knowing it, well, then go become a plumber. And I don't say that sarcastically, kind of I do, but I say it because it should be basic. If it's not basic, that's why I started this video off by saying the basic is the most important part of trading, because most people skip it. Most people skip it. Water runs downhill. That's the most basic thing in plumbing, but everybody knows that as a plumber, right? Imagine if you didn't know that and you're trying to become a plumber. So get yourself together, understand what the 4 golden rules of trading are. And I did a video on that. But then have things make sense to you. If it doesn't make sense, move on. Really, move on. And I say that in a genuine way.